Hey traders, I appreciate you being here. In today's video, we're going to talk about one of the most successful traders and investors of all time. He's a guy who you probably don't know much about, but there's a lot of valuable lessons that we can pull from him and apply into our own trading. What's up guys, my name's Austin Silver. I appreciate you being here. If you're new, do me a favor, hit the red subscribe button below me. That way you don't miss any future trading videos that we put out here at ASFX. And if you enjoyed today's video, just give me a thumbs up. That really does help with the YouTube algorithms. Now, today's video, I gotta give credit to Steve Burns. He inspired me to make this video. His article, I'm gonna link that in the description below so you can go read that. His article details a couple of the lessons that we're going to talk about, but I focused on a few just that I felt were more applicable to what I do and how I trade and what I share with you guys. So again, Steve, you're the man. I know you're watching. I appreciate you putting out this article and letting me make a video about it. Now, before we get into the 4 tips from Jim Simons, we're going to talk a little bit about his background and what he did before he traded and what he did up to this point now with his trading career. But I gotta plug, of course, the ASFX trading journals. If you guys haven't grabbed one already, the link for them is in the description to this video as well. So far, the feedback is fantastic. Everybody is loving the journals just because of the prompts in them that I wrote, that we built to force your growth. We call it to force your accountability every day. So check out the journals, link is in the description. I know you're gonna love it. Now, to Jim Simons, just a few things to me that stand out to me that I think we should talk about before we go into this whole thing. First, his fund has a very interesting fee structure. They're one of the only funds that has this, where they take 5% of your initial capital and 44% of the profits that he makes on the money that you invest with him. So that's a very, on a spectrum of low to high, that would be a very high fee structure that he has built. But it's warranted because in 2003, because of his growth, he actually had to close the fund to outside money. And there was a story that I found while doing more research on him on YouTube, talking about a guy who used to work for Jim Simons, and they had a falling out. And part of the severance that the guy negotiated was that he was allowed to stay invested in the fund. So even though he was getting fired and had to go find a new job, he was so desperate almost to leave his money invested with Jim Simons because he knew that it would grow. Now, Jim is originally a mathematician. All of these tips that we're talking about are based in his idea that the markets are driven by math. And him being a smart, super smart guy from MIT, he applied his mathematical knowledge and experience to the markets, and that's why he's been so successful. He builds trading algorithms, and we're going to talk about how he does that and how you can apply it into your trading in a second. So from Steve's article, I'm just going to give you a couple points. Jim's preliminary models are pattern recognition models. Jim was a mathematics professor, like I said, from 1968 to 1978, so a decent amount of time. He was also the chair of the mathematics department, and he started in 1982 in the hedge fund industry. Currently, he's worth $23.5 billion. His company, it's called Renaissance Technologies, has a fund. Its main fund, the head flagship, whatever you'd like to call it, fund, is called the Medallion Fund. Now that's the one that I was talking about, that they've closed it off to outside investors since 2003. This is a quote from the Gregory Zuckerman book, The Man Who Solved the Market, which is about Jim Simons. I highly recommend that. It's linked in my Amazon store and on my Audible store, so you can check the description if you want to grab that. In the book, he says, since 1988, his flagship Medallion Fund has generated average annual returns of 66% before charging hefty fees, 39% after fees, and it says racking up trading gains of more than $100 billion. No one in the investment world comes close. Not Buffett, not Soros, not Peter Lynch, not Cohen, not Ray Dalio. They all fall short. So even after fees, he's still pulling in 40% returns. It's pretty incredible. So let's move into what Steve Burns wrote as the first tip that we can take from Jim Simons. He says it's that you have to quantify your edge through backtesting. Jim said, we search through historical data looking for anomalous patterns that we would not expect to occur at random. Backtesting past historical price data can give you an edge in trading current price action. Price patterns can repeat. This is something that we've talked about, you and me, a lot right? We know how often these patterns can repeat. That's what my systems are built on, the A1, the D1, and the D2. So you can see I didn't invent this idea. I've heard this from multiple traders. I mean, those guys that we just mentioned, Dalio and a lot of them, some of them are more fundamental guys, but especially Paul Tudor Jones is one of the guys who I think of that is a pattern-driven trader. They're looking for patterns in price. So why would you think that you should be doing anything else? So that's the first lesson that we can take from Jim Simons, is that you have to quantify the edge through price patterns and quantify it through the backtesting. Quantify it meaning prove it to yourself. Get data, a large amount of data that shows those patterns repeat. The second tip that we're going to take from Jim is that you have to trade your system with discipline. He says, we don't override the models. Now, of course, we're all human, and Jim, if you read that book, The Man Who Solved the Market, there's a couple stories in there where he overrid the models. A couple of them worked out well, a couple of them ended up being really big losses. Overall, Jim looks back on it and he says that it's much more important to just stay disciplined rather than to try to go out and go for that big home run. So here it says all systems have drawdowns and losing streaks, even the ones used by the Medallion Fund. Some of the strategies that they would try would run into losing streaks. But if they use proper risk management, proper position sizing, and they cut their losses fast, which all requires discipline, then they're able to still be successful. So trade your systems with discipline is tip number 2. Tip number 3 is you don't need a high win rate to make big returns. Jim Simons' models did not need a high winning percentage to make money. If you have 1 to 2 or 1 to 3 risk reward, you can make large returns as long as you don't take big losses. So Steve says a small edge can make a lot of money over the long term as long as you keep the losses small. Even if you end up losing 4 or 5 trades in a row, because your winners are going to be 3 to 1, 2 to 1, 3 to 1, 2 to 1, you're going to outweigh those losers far and none. So tip number 4, our final tip, is that there are universal principles to profitable trading. This is what Jim Simons says. Profitable trading comes down to math, the math of risk management, the math of position sizing to avoid risk and ruin, the modeling of a trading system with a positive expectancy, and cutting losses short and letting winners run. So you need to be disciplined. You need to have that system. It comes down to really good risk management and good position sizing, not being too heavy and being able to guarantee yourself winners. For me, I interpret a lot of that, especially the part about cutting losses short and letting winners run. I always interpret that with the added on of locking my stop loss and making sure I'm not giving back trades. Peter Brandt talks about a trade that he used to do, and it would cause a lot of issues for him, called the popcorn trade, which is that it would pop 2-3R and then end up coming down and coming back, and he would either lose or get stopped at break even without taking any profits along the way. So I think all of this works together. Risk management, to me, a part of that is moving your stop loss. Position sizing, that's a part of the way you grade the trade. Trading with a positive expectancy, that goes into the back testing to prove that the system is still working and still profitable. And then, of course, cutting the losses short and letting the winners run. The last thing here, Steve says the biggest lesson from Jim Simons is that profitable trading is built on the foundation of math, but a human has to have the discipline to follow the math without allowing bad emotions to unplug the good system. And that's what we're all about. You know, I talk about the system and the rules that you follow in all of my trading videos. So now I'm hoping that after today, you hear it from Jim Simons' perspective. You can see how he applied some of these ideas, and you can see none of us are reinventing the wheel. Successful trading has been done many, many times. It's human error that causes most people to mess up, lose money, and then they go off to call it a scam or whatever they say. But if you can follow the rules that guys like Jim are laying out for us to follow, because that's what they did, the path is already there, guys. It's just between you and yourself making the right decisions to stay on edge. So I hope this video helps. I hope it gets you thinking about how you could maybe, take one of these 4 tips and apply it into your trading more. Let me know in the comments which of the 4 tips sticks out to you the most. And yeah, I know it's going to help your trading going forward. So if you enjoyed the video, give me a big thumbs up. I appreciate that. The YouTube algorithm will appreciate that. Make sure you're subscribed so you don't miss any future videos or content that we're putting out. And I really appreciate you being here as always. Thank you, everybody, and I'll see you in the next video.